is now a good time to buy a property in Dubai? Right now is generally considered a favorable time to buy a property in Dubai, and we're going to go through all the relevant reports and all the data, especially if you're looking at it from a long-term perspective. The market is a lot more mature than it is or was many years ago, and there has been huge speculation about a price correction. Towards the end of 2025, early 2026, there is going to be a lot of surge in terms of new supply from off-plan properties that are going to be handing over. So the most important part is going to be your investment goals, your time horizon, and there are opportunities within the market that are going to perform a lot better, and they are in a lot more demand. Dubai's real estate market has experienced an extraordinary boom since 2020, which was just after COVID, especially with central property prices increasing by over 122% in 5 years. The first half of 2025 saw record-breaking transaction volumes and values driven by strong international demand and government initiatives, but there's a lot more to it. So let's have a transparent conversation. There's two different sides of this conversation. You've got the positive indicators on one side, and then we're going to take a look at factors where we are going to see somewhat of a correction. Why is this happening? Why is this now taking place? So let's start with the positive indicators. The market now benefits from a tax-free environment where there's no property tax, there's no capital gains tax, or there's no rental income taxes. You're seeing high rental yields in comparison to other Western environments, where you're now seeing an average of around 6.8%, often higher than other global cities, and a stable, growing economy. When I mention the government initiatives, what we're now talking about are government programs like the Golden Visa for property investors, which is also now continuing to attract foreign buyers. You now have a GDP which is increasing year on year, and it's a very forward-driven economy, especially where there's less red tape. So there's a lot of talk right now in the market about a possible correction. Where is this actually coming from? Let's take a look at the actual data and deep dive whether this is a good thing or this is a bad thing. Or how should we actually view this? The significant increase in new housing units expected to be delivered in late 2025 and 2026. We're seeing around 90,000 units in 2025 and 120,000 units in 2026. This is most likely going to outpace the population growth and soften prices or cause a moderate correction in certain segments. In my opinion, this is viewed as healthy in terms of a market adjustment rather than a crash, because Dubai now is a lot more stable as an economy and also as a property market because it is driven by heavy cash investment. Let's talk a little bit about investment considerations, because we do consultations all across the world. So when I sit down across from people, whether it's on a Zoom call, whether it's on a phone call, whether it's in person at one of our roadshows, the most important factor that I break down is investment considerations, or the reason why you're looking at buying this particular property. Your approach to buying a property in Dubai should be guided by your objectives. So let's take a look at some of the different objectives. For long-term investment, it remains positive due to the city's strategic urban planning. So when we take a look at the Dubai 2040 master plan, we can come to understand how they're now going to be building the city short-term, mid-term, and long-term, where the growing population is now coming from, what's driving these factors in terms of economic diversification, and long-term investors can likely ride out short-term fluctuations. But when we start speaking about short-term fluctuations or short-term investment approaches, let's say you want to flip a particular property, the market is now becoming more selective. While off-plan properties are in high demand, master-planned communities offer potential for appreciation before completion. So timing the market for quicker returns is now becoming a lot trickier due to the anticipated supply surge. So for personal use, or something that the market refers to as end users, for those planning to live in Dubai, buying now can secure you a home and saving on rising rents. The potential price softening in late 2025 could offer an opportunity entry point for more affordable properties. However, this can vary when you're looking at some of the most anticipated off-plan launches in the market, because they are now considered to be lower than the current market prices for the size of the property that you are now finding within the market itself. When we take a look at key areas and projections in Dubai, we can come to understand that different areas of Dubai property are performing differently. Luxury segments and specific communities are seeing higher appreciation, especially when you are now buying a particular property where the location is something that cannot be replicated, i.e. waterfront projects or certain communities that are in very well situated locations and there's only a certain amount of units, but we are seeing now a higher demand. That could be for villas within the market right now. So when we're taking a look at certain performing areas, we can come to understand that in certain areas, there's always going to be that demand. Whether you look at across the world, whether it's central Manhattan, or whether you look at, areas in London, where it's Mayfair, Knightsbridge, we can see a common consideration here where those areas will always be a hotspot and there's always going to be a demand for it. And that just comes down to human behavior. So in Dubai is the exact same thing. We're expected to remain resilient with continued but more moderate price growth due to limited supply and high demand from high net worth individuals. So whether at somewhere like Palm Jumeirah, Emirates Hills, downtown Dubai, Dubai Hills Estate, these are very favorable areas that we will see less of a correction due to the demand. So then let's take a look at the mid-market segment, right? Where you've got areas such as, Business Bay, JVC, International City, Dubai Silicon Oasis. It offers some of the highest rental yields within the market, up to 9% or more, depending upon your approach. So you could give it to an individual who's a long-term client, or you could adopt a philosophy where you're doing it short-term rentals. And that's very attractive in the sense to end users, also yield-focused investors, though you may find some price pressure may occur with the new supply that's now coming within these particular areas. So it's very important to do your due diligence when you are looking at those specific areas. We keep referring to, do your due diligence, understand the market, but what's the actual best way to conduct thorough research? The first thing I say is work with a licensed real estate professional and also consider service charges, maintenance fees in your financial planning. For up-to-date specific data on prices and transactions, you can check with the official Dubai Land Department statistics or use platforms like DXB Interact and also Property Finder to see what the market is currently offering and what you would potentially be paying, whether it's a secondary property, which is an existing property, or something which is off-plan directly from a developer, or even buying from an individual that has bought from the developer on something that we refer to as a secondary resale. This is actually going to be one of the favorite parts of the segment from my side, because a fundamental question that I get asked is, Hamza, what's driving the growth and is it sustainable? Two great questions. And when we look at Dubai's property market growth is driven by a combination of strong economic fundamentals, government initiatives, and a significant influx of residents and high net worth individuals with world-class infrastructure that is now being implemented. So let's deep dive into those particular elements. First and foremost, Dubai's population growth. Dubai's population has been growing rapidly, reaching over 4 million by August 2025, with a goal to reach 5.8 million people by 2040. So when we're looking at this continuous influx of new residents, whether it's expats and also local workers, which has to be taken into consideration, it does create a sustained and high demand for both residential and commercial properties, particularly in sought-after areas. So another point to follow from that is government policies and initiatives. The government in Dubai has introduced pro-investor and business-friendly policies that have now significantly boosted market confidence. What do these actually include? So first and foremost, you're getting the Golden Visa program, which is a long-term offering of 10-year residency to property investors, among others, where you're now heavily incentivized for long-term commitment and also ownership. Number two is you're getting tax advantages. Dubai's tax-free environment includes no income tax, no capital gains tax, or property tax. And it's a major draw for global investors seeking to maximize returns compared to other global cities. And number three, which is one of the main driving factors which occurred after COVID, was freehold ownership laws. Laws permitting full foreign ownership of property in designated freehold areas have opened up the market to a diverse international buyer base. So when we take a look at economic diversification and we take a look at stability, the Emirate now has successfully diversified its economy away from oil. So it's focusing on other sectors like finance, tourism, technology, and trade. This robust, diversified economic growth, GDP is now projected to increase and grow by a further 3.7 to 4.8%, leading from the end of 2025 going into 2026 towards the end of 2026. So now what it's doing is it's attracting multinational corporational and professionals, creating jobs, and it's going to be a lot more stable in terms of an economic foundation, especially for the real estate market. And one of the biggest metrics that we have been seeing is the influx of international investors or high net worth individuals. Dubai at one point now was second to Australia, but recently it has overtaken Australia now to become the number one city in the world. And what you are seeing now is when we take a look at global economic and political uncertainties, Dubai has now positioned itself as a safe haven for international capital. So high net worth individuals and families from Europe, Asia, and other regions are migrating to Dubai, and they're looking for stability, security, and a luxury lifestyle, which in turn drives demand for high-end properties. Are we going to continue to see this? From the data right now, absolutely. So another point, infrastructure development. In Dubai now, it's been continuous. There's heavy investment in world-class infrastructure projects, such as the expansion of the current Dubai Metro, the new Al Maktoum International Airport, and the development of integrated master plan communities, which is now going to enhance connectivity and the overall appeal and value of properties in those areas. So look, very simply put, when we take a look at other cities across the world and how they were built, a lot of particular areas benefited from increased property prices because of infrastructure projects, whether it was a railway, a metro expansion, a new international airport, connectivity, or a bridge connecting a particular area to another area, whether it reduced an individual's commute. But all of these factors now come down to human behavior. Someone is now benefiting from this. And this you have to take into consideration when you're buying a property. Because if a particular property now it takes you a certain time to commute to Business Bay or JLT or DIFC, where you have a lot of office spaces in Dubai, and now you've introduced a new road, a new metro station, which is going to reduce the time of commute from 35 minutes or 30 minutes to now 15 to 10 minutes, that is now going to impact those property prices, because an individual will now say, okay, it's now going to take me less time to get to work. So that's now considered benefit, connectivity. You've also got elements like the Etihad Rail, which is now going to reduce the time from Dubai to Abu Dhabi, which is going to be by train. So those individuals that may be working for companies in Abu Dhabi, where you now got JP Morgan, Morgan Stanley, and also BlackRock, and they want to spend a little bit more time in Dubai because they've got family and friends here, that now makes it a lot easier for them as well. So buying a property near those particular areas will see a huge benefit. And what Dubai has actually been known for now for a very, very long time, it's strong tourism industry. A booming tourism sector with record visitor numbers, over 18.7 million overnight visitors in 2024, which then increased in 2025, creates high demand for short-term rentals and hospitality assets, further supporting the residential market and overall property values. So supply and demand dynamics within the market. While new units are consistently being built, demand, and especially for luxury and family-friendly properties, has often outpaced supply in prime areas, leading to strong appreciation and high rental yields. People are looking for areas in either super prime locations where there's not much land left to now build, and the infrastructure around that particular area is now ready because they want to move in with themselves and their families, or they're looking for high growth areas where the opportunity off plan is below what currently is in the market, and the quality supersedes what is now currently in the market with the latest technology that they're now involving. So is there a potential property bubble risk in Dubai? The risk of a property bubble in Dubai is considered elevated, according to the UBS Global Real Estate Bubble Index of 2025. But most experts do not predict a market crash. Instead, a moderate price correction, especially in particular areas, largely due to the significant surge in new housing supply. And let's deep dive into that a little bit. The factors contributing to bubble concerns: rapid price appreciation. Property prices in Dubai have risen over 50% in the last 5 years, outpacing local income and rent growth, classic red flag for overheating markets. Then we take a look at the supply surge. A record number of units are scheduled for delivery in late 2025 and 2026. For 2026, we're looking at around 120,000 units alone, which could outpace demand growth and put downward pressure on prices, particularly in the apartment segment. But what we are seeing, that will depict on the area that you are looking at, also the developer, the quality of build, and what that particular building now has to offer. When we take a look at speculation in the market, the boom in off-plan sales attracts short-term speculators. A sudden shift in sentiment or global liquidity tightening could prompt a quick exit, amplifying price swings. And that's why I always say the first markets that will get affected, if anything does take place, is the 1.5 million dirham market and below, where in contrast, if you're buying a property which is 2 million dirhams and above, because those type of investors or that particular demographic is a different type of demographic, that would get impacted less if there was some of a panic. The speculation side of things. Whenever you have a market where a lot of money is now being made in a short period of time, whether it's any commodity, let's take a look at cryptocurrency, let's mention gold, let's take a look at any other things, whether it's wine, any asset where people have made a lot of money in a short amount of time, i.e. the Dubai real estate market, you now attract short-term speculators. Now, a sudden shift in sentiment or global liquidity tightening could prompt a quick exit, amplifying price swings. So a lot of people, whether they've pitched their clients or whether someone has an intention of flipping off-plan projects or coming in and coming out of the market very, very quickly, that can shift the market short term in particular areas or particular communities or developments. The market is now underpinned by strong demand drivers, including a rapidly growing population, robust economic diversification, and sustained foreign investment. When we take a look at the transactions in Dubai, a large proportion of the property purchases are made with cash, reducing systematic leverage risk and vulnerability to interest rate hikes or mortgage defaults, unlike credit-fueled bubbles seen in other global cities. Now, let me give you an example. When you're buying an off-plan property, the payment plan could be 80-20, so 80% during construction, 20% upon handover. It could be 70% during construction and 30% upon handover. So that means 80% of that is now cash, which is going into these properties, mitigating further risks of people now defaulting or taking these particular investments or property purchases now on board. What we are seeing is proactive regulation also from the Dubai Land Department, which has now implemented stringent regulations such as higher down payment requirements and escrow accounts for off-plan projects from the developer standpoint to curb reckless speculation and protect investors. High rental yields are another point here. Despite price increases, Dubai offers some of the highest rental yields globally, averaging 6 to 8%, which suggests prices are supported by real demand for housing and not just speculation. Dubai's safe haven status. International investors now are seeing increasingly elements of a stable and secure place to park capital amidst global uncertainties, providing now a resilient source of demand. Look, in conclusion, while the market exhibits signs of being heated or overheated in certain segments, strong underlying fundamentals and government oversight make a catastrophic collapse less likely than a healthy, moderate market adjustment in the near future. So when you are looking at buying a property now in Dubai, I think the market has shifted where you can't just buy anything. I think you have to understand the fundamentals of the market. I think you now need to understand why you're buying that particular property. Most people may look at it from an investment standpoint, but some people are looking at it from a more emotional standpoint, in the sense that it now comes down to moving from a particular city now to Dubai, and they don't want to compromise on quality or space. So understanding what your needs are in the market right now and what the market has to offer is the most important part. I think once you can break that down and you're speaking to an expert, there are certain options in the market which are phenomenal and they have a lot more scope. And when you look at the market long term, it looks super positive in comparison to what we are seeing from a short term element. Dubai now, in comparison to other global cities across the world, is in a very, very strong position, and the demand is growing continuously, and it is a forward-thinking city led by a forward-thinking government, and things here get implemented and executed so much faster in comparison to other cities across the world. And the offering right now in Dubai, from my side of things, is positive, especially whether you're looking to invest in the market, especially if you're looking to move to Dubai now and set up a life for yourself and your families, or if you just want to come here for 3 to 4 months out of the year and enjoy what this city has to offer.